Welcome guys to my channel. It's Victor here, and today I'm back again with another video. I'll be talking about the current situation in the market. And looks like the market is now gaining momentum and it's beginning to pick up slowly. And as we can see from the Nasdaq, that is from CNBC, we see Nasdaq jumps for second straight day, gains 2% as stock, that is as tech stocks rebound from January slide. It's been a pretty rough month last in January, that is last month. And let me say that currently, as of now, there's hope towards the stock market. But the thing is, we don't know how, it's very volatile. We don't know how long this will last. But currently, we can see that e-commerce stock Shopify gained more than 5%, while Etsy gained 3.8%. Stay-at-home favorites such as DocuSign and Zoom Video jumped 5.2 and 4.8 respectively. That's not bad. That's not bad. Another thing that I wanted to talk about was that is the shares of Norwegian Cruise Line Holdings rose to 4.38. That's not bad. Looks like we are now headed in a good direction. That is according based on the information we have from CNBC. And I know everyone likes looking at CNBC. We have companies like Chipotle rose more than 10%. That's really good. And I've also actually seen something about Uber, like it has done pretty well. So that is on the earnings front, Chipotle rose more than 10% on the back of its strong quarterly numbers, while Lyft gained 6.8% despite announcing it had fewer active riders in the prior quarter. I actually this morning received um, an email that is like one of those promotional emails from Lyft, like whereby if you maybe like get a Lyft ride within San Francisco, you're getting 50% off. And I was thinking, how are they making money if they're willing to like, you know, give you a 50% discount? But again, it's still, it's too early to like make any predictions right now because companies are doing what they can do to just keep their heads above the, above the sinking ship. But yeah, so far so good. Okay, now let's keep going. Solar stock, that is Enphase Energy, surged 12%. That is after the company beat estimates on the top and bottom lines for the fourth quarter and delivered upbeat guidance. Okay. Let's see. Disney, uh, as of the opening bell on Wednesday, roughly 60% of all S&P companies have reported fourth quarter earnings, and about 77% have topped Wall Street earnings estimates. That's really good. Um, Now, let's just talk about inflation a little bit. The inflation data is estimated to show that prices rose 0.4% in January for 7.2% gain from 1 year ago. I think these, 2022 was off to a very shaky start because we could see that so many, like with Bitcoin and everything, and Facebook, losing so much money. The market was really bad, honestly. It was really, really bad. Mhm. But now the thing is, currently, it looks like there's hope at the end of the tunnel. So we can't just discount, or we can't just base the market on January. That is based on what happened in January. We can't just move forward, keep moving forward, saying that what happened in January will what will happen throughout the year. Things just change abruptly. Now let's take a look at that is this is something that I read about the Uber stock market today. Let's see. So there's this Uber on revenue says core business is bouncing back after Omicron surge. And as of now, like you can see here, it says that Uber beats on Q4 quarter revenue, that is Q4 revenue, That is 5.78 versus 5.34 billion. So it has reported that looks like they're doing pretty well. Let me just say that. Looks like they're doing pretty well. And as we can see here, the earning per share is at 44 cents, and the revenue, as you've seen, it's 5.78 billion versus 5.34 billion. That is according to the Refinitiv survey of analysts. Well, they've reported an income of 892 million, which includes a 1.4 billion net benefit that is pre-tax related to its equity investments. So I think business looks pretty good right now for them, and let's just hope that they'll have a great year ahead of them. Because with everything, like since people have been working from home, so many people are not taking the rides. No one's like Ubering around as often as like that is before COVID. And with everything going on, like the shutdown has really affected so many businesses, but at least they have the Uber Eats. And right here we can see that the company's delivery segment, which includes its Uber Eats business, has continued to hold up as food delivery. And I was actually listening to so that is something on the internet on YouTube about a certain food. I think it's Instacart, if I'm not wrong, that had like exponential growth within 5 years. That is during COVID. Like the growth that they had within 5 years is equivalent to what they would have had in 5 years, but they had this growth in 5 months. That tells us that people have been ordering lots and lots of food, and since no one wanted to be outside and everyone was scared about getting COVID, so most people opted to have a delivery service, the food delivery service, and I bet they made so much money because of COVID. So it says that the delivery revenue of that is 2.42 billion outperformed the 2.28 billion generated by its core riding hailing business. You can see the difference. If one is done, that is why it's always good to have something on the side to keep you going. This is just a segment, and you can see that it's bringing way more than what the ride sharing, uh, its ride hailing business would have brought. So, and freight revenue was up to 245% year over year to 1.08 billion. It's pretty good. Let me say that so far it doesn't look bad that at least they have like the operating costs, and though there's not so much ride sharing, like so many people taking trips with the ride sharing thing, at least they can focus on the food delivery in the meantime. Um, so that is okay. Like now here it says that Uber reported 1.77 billion trips on the platform during the quarter, up 8% from the prior quarter, and 23% from 2020. So monthly active platform consumers reached 118 million, also up 8% in the quarter. Drivers and couriers earned an aggregate 9.5 billion in the quarter. So, well, no comment on that currently, but let's just keep going. Another marker of pandemic recovery, airport gross bookings represented 13% of Uber's mobility gross bookings. That marks a 24% increase over the third quarter and nearly 200% from the same period a year ago. That's what I'm saying, that business is really good for them. So for its first quarter of 2022, Uber said it is projecting gross bookings of 25 billion to 26 billion. And I bet they can beat that because things are now coming back. Like they're slowly getting back there, but we don't know, like anything can happen. That's the thing about business, like uh, anything can change. So it anticipates adjusted EBITDA of 100 million to 130 million dollars. So overall, let's say that Uber has is on a good recovery journey. I don't know about the other companies, but and also Lyft, since they're also based on what we've seen, and the stock market, showing a good sign of their shares going up and everything. So I think it's a good sign that business is slowly getting back to normal, and maybe within no time will, the stock market will be up and running again. So thanks guys for listening to me, and if you guys like this video, please give it a please hit the like button and share it with your friends, and don't forget to subscribe to my channel. And I'll be making the more of these kind of videos where I talk about the stock market and that kind of thing. So you guys have a good day. Bye bye.